2026 has been a challenging year for a lot of stock pickers. Many investors are down 5, 10, 15, 20, even 30% year to date. I've seen them on X, and they're feeling down. They look at their portfolios. Then I look at the S&P 500 is still flat, is still in the green, and they wonder if stock picking is even worth it. They feel like giving up. They're like, why did I do all those work? Why did I watch Warren Buffett? Why did I try to value stocks and read articles and read valuation models and do all these things when I could have just put it in the S&P 500 and been much better off? This is completely normal. I have experienced it myself. I've seen many investors, and most investors experience it themselves. And maybe this is your first time experiencing this part of the cycle, having no thoughts, or maybe you're feeling down in general. And I'm gonna try to help you out in this video, talk about those things, and let you know how to navigate this part of the cycle and how to not give up whenever you're feeling down on certain stocks or certain investments. And I know such videos, they're not gonna get a lot of views, but if I did help you, all I'm asking is please press the like button and let me know what you think in the comment. Now, the typical part of the investor cycle is they start investing in the market with a specific strategy. They start very disciplined. Maybe they are index fund investors, they invest in index funds. Maybe they're quality investors, they only invest in like the biggest, best companies in the world. Maybe they're dividend investors, but they invest in a specific strategy. Then the market starts going up and they start watching their friends make easy money. You just hear people, the Dogecoin millionaires, they bought Trump or Melania coins, they made hundreds of percent. They gambled on options, on futures. That's why futures are popular on Robinhood, because retail is trading them. They've seen others make money with them. But you just see your friends making money, and they're making easy money. You're valuing stocks, you're reading books, you're reading annual reports, you're doing all these things. But all these other investors on X, they're buying all these hyped up story stocks or the EV stocks back in 2021. They ended up going down 90-95%, but they're just making easy money. And you get really tempted to break the discipline and join them. You just want to do whatever they're doing because it has been working so well. And you decide to join them. And you start getting out of your discipline, maybe index funds or certain stock picking, and you start doing something a little bit riskier because you're just feeling euphoria. You feel missed out. You feel just FOMO in general. And there's nothing worse than watching your neighbors or your friends making money while you're not participating. So you decide to participate. You start making money. It feels great. You feel validated. You feel like you did the brave thing. You feel that you did the right thing, and you just feel good in general. And your stocks go even higher and higher and higher. Then those stocks starts going down. You buy the dip because everyone is taught to buy the dip. You feel validated again because you bought the dip and the stocks went up, and then you feel great again. Then those stocks go down. You buy the dip. They go even lower, you buy the dip. They go lower, you buy the dip again. And you buy every single dip, you're pretty much out of cash, and those stocks go down another 10, 20, 30%, while the S&P is flat, or while someone else on X that shorted the market is green, and you're feeling down. You feel like giving up. You feel that you just did something wrong, and you just feel like you need to go back to index funds. And this is pretty much the opposite of what most investors should be doing. They should be investing in index funds whenever the market's going well, and potentially picking stocks, cheap stocks, whenever the market's going down. But you decide to do the opposite, and then you just feel like giving up in general. And I've seen many people capitulate into index funds, and I call it the greatest rotation to index funds or passive investing whenever the stock market goes down. And there's nothing wrong with that, because stock picking is not for everyone. But for me personally, that can never be me. I could never give up, and I could never be an index fund investor. How can I be an index fund investor when I made 147% return in 2020? 147%. My entire net worth, my entire life has changed within 1 year. But the reason why I experienced 2020 is because I didn't give up in 2018. In 2018, I was down 35% into December. I FOMO'd in on the first dip. I bought everything. I just had FOMO. Those stocks went down even more. Apple went down even more. Everything went down even more. And I just felt depressed. I didn't have any cash, and I kind of let price action influence me, and I lost my faith in a lot of stocks, and I just lost it in general. I just felt really, really down. But I held through, and I didn't give up. Because I didn't give up, I experienced 2020. In 2024, I made 54% return. The reason why I experienced a 54% return is because I didn't give up in 2023 when I barely outperformed the S&P 500. I had a lot of losers. A lot of stocks were down. A lot of people gave up on me in my own group. They said I was no good and I just don't know what I'm doing. But next year, I got a 54% return. The only reason I got got those returns is because I didn't give up whenever I fell down, whenever stocks didn't do too well, whenever I made some mistakes. I learned from mistakes and I apply them to the next year. So you always have to remember that maybe next year is going to be your best year. Maybe next year is going to be the year that's going to give you life-changing returns. All you need is that 1 year, one stock, one Palantir, one Nvidia, one bull market, like people that got rich easy money from 2010 to 2020 with fairly low volatility and they just rolled it up. All you need is one. So if you give up today, what if next year is going to be your best year? What if the next stock you buy is going to be the best stock ever? It's going to recoup all your losses and it's going to give you life-changing returns. What if that happens and you're giving up today? It would feel really, really bad, wouldn't it? So this is a book that I would recommend. And I'm not promoting the book. I don't have any kind of affiliate links or whatever. But it's called The Power of One More, which is mainly a business book. And he says that you're one decision away from changing your life. Could be one call. And with that call, you meet someone and that person changes your life. Like Munger changed Warren Buffett's life. And when he met the person, imagine if he didn't meet Munger, what would have really happened to Berkshire Hathaway and Warren Buffett's returns? And it's the same thing in general, same thing with investing. Maybe you're one stock away. Maybe the next stock you buy is going to be the stock that goes up thousands of percent and it recoups all your losses and it gives you life-changing returns. Maybe you're 1 year away from achieving some kind of life-changing returns. Maybe in 2027, it's going to be your best year ever, or maybe it's the second half of 2026. So you're going to give up today because you're down 20% or 30%. To me, this is madness. This is why I don't really feel down. Whenever I'm not doing too well, whenever my stocks are going down, I try to learn and I try to get better. And I'm going to be honest with you about something. Last year, I had a bad year. I underperformed the S&P by 1.2%, which for me personally is a disappointment. It's not a biggest deal in the world, but it's a disappointment. I made some mistakes and it happened. People gave up on me in my own group, just like they gave up on me in 2023. And a lot of them told me, I'm not going to be buying the stocks you're buying because maybe they end up losers like the ones you bought before. And they left the group. I said, okay, no problem. So the next stock I bought was TPL. The stock went up 76% year to date. 76% in 2.5 months. This stock alone had recouped a lot of the losses that I had before. Then I had Constellation Energy, which I've been buying pretty much over the last few weeks. The stock is up 33% from the bottom. And those two stocks alone has helped recoup all my losses. So imagine if I gave up like the other people because just I had one bad trade or two bad trades. Of course I didn't give up because maybe it's going to be the next one. And maybe the stock that I'm going to buy after that is going to be the stock that's just going to give me massive outperformers. And maybe I'm going to have another 30 or 40 or 50% year. So this is my mindset. This is how I'm always optimistic. This is why I don't give up. Whenever I make mistakes, I don't feel down. I do feel down sometimes. Of course, I'm human, but it doesn't really affect me because I've had some good years and I try to remember the good years and I experienced the good years because I didn't give up in the bad years. And if you're a new investor, that's going to get better. Once you experience a good year, 2 good years, then you have something to remember and to look forward to, which is why the first time is the hardest, but then it gets better over time. And this is a few things that you could do that could help you navigate this whole setup. The first one is to stop staring at your return chart. So I see people all the time, oh, I'm down 40% from all-time high. I'm down 30% since October. How do you even know that? Why are you trying to measure how much you're down from the top? How is this going to help you? It's just going to give you depression. It's going to give you misery. It's going to give you negative vibes and negative mindset in general. This is like you're trying to get negative emotions for you to give up, like you're talking yourself out of investing. For me, I don't even look at that stuff. And if I didn't have to update my group members, I wouldn't even look at my year-to-date returns. I'm focused on stocks, focused on the fundamentals, on finding the next stock. I'm not focused on crying on my year-to-date return. I'm focused on finding the next stock because it could be the next stock that's going to get me out of whatever I'm in and I'm going to experience some really amazing returns. The second one is stop comparing yourself to others. So this is another thing that I see where people compare themselves to some guy on X that's doing really well. And they believe that everyone else is like this person. Everyone is doing really well except them. But it's normally an illusion of reality. And it's normally most investors, maybe they're not doing as well. But you only compare yourself to like the best person on X or maybe the best performing stock ever. Like someone told me a few weeks ago, he said, why did I buy all those stocks? I could have just put it in Google and made a lot of money. So I told that person, what if you did that in 2024 and Google fell 60%? because people thought it was dead because of ChatGPT. And you went all in Google. Google went down 60%. What would you have said instead? I wish I put it in NVIDIA. So this is something that people always do. Is they try to have the hindsight. That everything in hindsight is obvious. And I wish I did this and I wish I did that. But the truth is it's easier said than done. And that's something that's not going to help you at all, especially if you're down a lot. The source things that I do that really helps me a lot is I have a Yahoo Finance watch list. So I track my stocks through Yahoo Finance, and that really helps me not to look at my portfolio in terms of dollar amounts. So let's say I look at my portfolio, I say, oh, I'm down 20,000 on Amazon. I'm gonna feel a little bit upset. But if I say, oh, I'm down 2% on Amazon, that sounds a little bit better, which is why I try to communicate through percentages and not much through dollar amounts, because dollar amounts will likely influence your decision a little bit more than if you're looking at it from percentages amounts. It's entirely different, especially if you're a newer investor with a small account, and dollar amounts really affect you because it's a big part of your net worth and you're just getting started. So looking at it in terms of percentages is going to help you in a major way. And as I said, once you do it the first time, it's going to start getting much easier for you. And this is something, again, that's how I learned all these things. That's when I did the video about trimming SoFi on October 31st. You can look at the comments, people calling me all kind of names, saying they're buying every share they can at $31. Well, since then, SoFi is down 43%. And now I'm buying the dip on SoFi. I was trimming at 31 when people loved it. Now I'm buying it when people are hating it in the market to sell in the stock. So you generally have to do the opposite of what most investors believe is the right thing to do. Like if most investors are all in on something and there's a lot of euphoria, it has most likely made itself on the price. And normally it kind of pays off to take the opposite side of the trade. Not all the time, but most of the time. And that's, again, something that I learned. But your first time is the hardest. It's going to get better a little bit after. And I hope this video helped you a little bit. And I hope it just helped you in general. If it did help you, if you know a little bit more about what I do when I'm buying something, when I'm selling something, I'm sharing everything I do in my own group. This is the link if you're interested. So thank you again. Not financial advice. Hope you enjoyed it. If you did, let me know, and I'll talk to you in another video.